When should you start investing? Hey, I'm Michael, and we talk about investing and personal finance. Welcome back to another video. So today's topic will be when should you start investing into share markets? But I'd like to phrase the question a little bit differently. What should you do or what should you consider before starting investment? I think that's a much more important question to ask, to understand what is your current situation, what are the products that you can use, and maybe what can you use, what is already offered from the state that you live in or the country that you live in. Is there probably something that is subsidized? And also, obviously, to make sure that your financial basis is there and correct. So that's the main topic we talk about. And I would say, let's get into it. So just to give you a bit of a better idea to what it looks like when you start investing very early. You can see on the graph that if you start investing with a very early age and you do that consistently, that you end up having way more money in your bank account than when you start later in your life with the same investing amount. So just imagine you would start investing with $200 per month with the age of 25. As you can see in the graph, it goes up quite high, actually, this way. And you can see that you invest around 69,000 in that entire time until you turn 65. And it turns out to be around over $500,000 if you invest $200 every month for 40 years. If you start with 35, you can see that you probably invest not even that much less money. It's still $72,000 that you have to put in, but you can see that it's way below the outcome that you have when you start with 25. So we are below 300,000. And that is because the magic of compounding interest. So this graph shows the investments with an average investment return of around 7%. And if you get your 7% return, some years are better, some years are worse, over that time frame, you will end up getting return on your investment on the money that you already received back. And so you always get the interest on the money you have in your account, and that grows year by year. And yeah, as you can see from that, that has an amazing effect if you invest for longer. So I just can't stress it enough. Start investing early if that is possible for you. And let's go to the next slide. And I wanna say again, it's important that you get your decision right and your situation. So you should think about what you can afford to put to the side. How much do you need from the money that you earn? And how much can you actually save? So try to figure out what is your financial situation, how much money do you spend, and how much money can you potentially put into savings? And there is a very good way of doing that. And I've actually got that from the Barefoot Investor. He wrote a book here in Australia which got really popular and famous, and it's around also investing and personal finance, and actually here in Australia one of the best-selling books over quite a number of years. And that's a concept of creating buckets. So create your spending buckets, your saving buckets, and this will help you to create a plan on how to work with your money on a monthly basis. As you can see on the image, there are 4 different buckets, And on the right side, you see that there is an emergency fund. If you don't have that much money at the moment, it's probably hard to create that emergency fund, but still you should not forget about it, and you probably should start with a very small number. And in the future, you should try to create an emergency fund that probably would keep you alive for around 3 months without having a job, or if you run into any problems, or if really something super unexpected happens. And that is really, that stays somewhere on an account. You would never touch it except there's an emergency and you need to take money from that account. And the other 4 accounts or buckets, you basically monitor on you don't monitor them, but you work with them on a monthly basis. And the best thing you can do is set up automations every time when you get your income. So every time on the day you receive your income, if it's the 1st or if it's the 15th, try to split your money in those 4 different accounts. I guess the biggest account is your monthly spending on rent, on grocery shopping, on other regular expenses, the gas bill, water bill, electricity. All this sits in the very left bucket, the monthly expense bucket. Then you obviously still want to have some fun, probably want to go on holiday, but that happens once or twice a year. And so you should try to put a little bit of money to the side that you know you can spend on those things, either for holidays or for fun. And so you know how much you actually can afford when you go and travel, or if you go and want to buy a new toy, a new computer, a new laptop, a new mobile phone, or something like that. And the 4th bucket, that is probably the one that I would use for investing. So that is what you would invest into, either the share market or in something else, probably even a property. It depends really on what kind of person you are. And if you then invest, you should invest for the long term, and there are different ways of doing that. But before you take that money on and do something with it, you should also try to get your retirement investment in order. So try to think about how much money you potentially need when you want to retire. Try to figure out what retirement options you have. They are available and probably subsidized from the country that you live in. And I prepared a couple of flags just to show you the differences in different countries. And so in America, we have things like an individual retirement account, an IRA. This is subsidized, and there are different forms of retirement accounts that you can use. And they have different advantages. I probably don't go into detail right here at the moment, but it's certainly something that you need to look in. And I'm very certain I will make a video about that in the future. But if you invest in your individual retirement account, you basically don't need to pay tax on quite a big amount of that money. And so you basically save money because you invest in this account. In Australia, the basic level of insurance and retirement fund is superannuation. And that's actually quite a good concept. In Australia, the company that you work for has to put at least 9.5% of your salary into a super account. That's on top of what you earn. And your employer has to put in that money into a super account. And that money can be invested in the variety of products that you can choose. And you can choose the super fund as well. In general, it is invested in a broader share market index. And what you should do if you have a little bit of spare money, you can actually max out the investment in that super account. So there's probably already money going in, but you can max out that super account. And I think the max out per year is around 25,000. And that's actually quite a bit. And if you would be able to save what you already get plus a couple of thousand extra every year, that would already bring you quite a long way. In Germany, it's a little bit different. There is a pension system by the state. And there's also the company that you work for has to put in money, and that's a regulated amount. But it is expected that that money is probably not enough to actually retire from, probably not for everyone. And you should try to see and find other options as well on top of your retirement fund that you have in Germany. And it is really hard to tell how much money you will have left over, and who knows, maybe it will change at some point in Germany. But yeah, try to see what products are subsidized and how much money you actually can get from the governance to actually put money towards your super fund or your retirement account as well. Once that is done, then you can start investing. And you can do that in different ways. I would say the most important thing is that you do that on a regularly basis, and you do that with a product or with an asset that you understand and that you think is suitable for you and for your situation. But just to give you some ideas on how you could invest. In US, you could do that with just buying stocks. There are some brokers, actually quite a number of brokers, where you can trade stocks for free and also funds for free. And for free means you just don't need to pay the broker for the transaction. So you obviously spend money on buying a share or buying exchange traded funds, but you don't have a fee that comes on top of that. And that's actually quite good. And some examples are Charles Schwab, which is one of the largest broker in US, but also Robinhood, which is a newer player on the market, but very established already. And they have an application for your smartphone where you can control your investment and where you can see all your investment. In Australia, it's a little bit more regulated, and you can't invest really small amounts of money, at least not if you buy shares directly or ETFs directly. The minimum spend for one transaction is 500 Australian dollars. But there are some products out there that allow you to just save on a monthly basis and to put your money in all the time, and they just always add it up to the product that you have already chosen. But still, I think the best thing you can do, try to save money up to a specific amount and then invest it in the share market. In Germany, there are actually quite good products that you can use. And it's a bit like an investment plan that you can set up with your broker, and you spend 1.5% from the money that you want to invest, and you can start as low as $25 per month. And it's a really smart way. You automate it, you set it up once, and you basically can forget about it until you want to adjust it or want to change the product or want to see how much it is grown over the time. But it's something that you set up once, and it will be automatically invested on a monthly basis, the money that you would like to invest. So these are just some ways you can invest your money, which I think is pretty good. And that would be a great start without really being concerned about what stock should I pick, or what a company is performing very well. All those investment products or the investment strategies that are just explained are very adjustable and can be very individual on what type of investor you are. Let's go to a bit of a market update, and let's see what's going on over what happened over the last week. Was actually it didn't happen too much. In US, the market was closed on Monday, so it was a little bit quieter, but you could see that the market was going a little bit down for a couple of days, and then it went up on Wednesday, on Tuesday quite a bit. But still, we are at the moment in a situation where the share market grow quite quickly, and we have quite a couple of weeks now where the market just went up, basically skyrocketing, like I mentioned in my last video. But yeah, it's probably still very interesting. We have now the reporting season starting in US, which is always interesting to see what companies are doing well and what companies are doing not so well, to see the latest earning results from the big players on the share market. This week we had IBM and Netflix. They already reported, and as you can see from the numbers, they reported on Tuesday night, and yesterday on the share market, the price for IBM actually went up. It's partly because they had really good results with their takeover from Red Hat. So it's actually the revenue of IBM is growing again, which did not happen for quite a while. So very positive to see here. And Netflix, yeah, that was everybody's darling for quite a long time. And you can see that over the last couple of months, probably half a year, since Walt Disney has announced that they will go into the streaming market as well, that shareholders are concerned that Netflix is not able to keep up against a giant like Walt Disney. But Netflix is still the biggest company that provides streaming. And yeah, I would not expect that will change very quickly, but who knows? It's a very modern market. And when there's someone like Walt Disney putting a lot of money into production, you never know. So the share price went down yesterday 4%. And I put down as well Atlassian. It's funny enough, it's an Australian company, but they are trading on the New York Stock Exchange. So their earnings will be revealed end of today. It's a company that does software development, the product called Jira, and it's for developers, and it's basically a program where you can set up routines and workflows of supporting programming. So yeah, I'm very keen to see what they do. It's a stock that was very, very positive performing over the last 4 years. So yeah, we'll see. And then on the interest rate actions that are going on. So in Europe, we still expect very low interest rates that probably will not change over the next couple of months. And in Australia, it's the same. So in Australia, the interest rate is also very low, not as low as in Europe, but at the moment it is not expected that the interest rate will further drop, which obviously would always be a positive indication for the share market, because people would spend more money in buying shares. But this is at the moment not on the table. So we'll see what that will look like. And yeah, then on to my next topic is what I'm watching on YouTube at the moment. And I'm following Andrei already for quite a while. So it's Andrei Jikh, Magic of Finance. And it's quite interesting. He mixes investing and investing strategies and talking about investing and how he invests with cardistry. So he's a little magician, and not just a little, he's actually pretty good and does amazing stuff in his videos. So he combines those two passions with investing and talking about investing, but also cardistry. So he always shows a couple of things in his video, which is great. And the videos are actually, they have a great content and still very funny to watch. And it's impressive to see how he has grown over the last year. He has started his YouTube channel just at the beginning of 2019, so a bit more than a year ago, or almost exactly a year ago. And he is just massively successful with his channel. He has over 360,000 followers already, and is getting thousands of views on each videos. And that's really great to see, because he's doing a great job with creating those videos. So a great shout out to him, and have a look on his YouTube channel. There are probably a couple of videos that you are keen to see. Definitely recommend it. And yeah, last category, have you heard about? And have you heard about P2P investing? You're probably thinking, what is that? Or maybe you even know. But yeah, it's obviously private to private investing, or person to person investing. And it has become quite popular, especially now that the interest rates in literally all developed countries is so low. Yeah, there are different platforms out there. In Europe, I can name the two biggest ones, which are Mintos and Bondora. And those platforms basically provide the option that basically two things. One, you can become someone that borrows money from another person, or you become someone that lends money to another person. And those platforms are just handling the actual agreement, and basically are the man in between to organize the borrowing and lending process. And interest rates, especially in Europe, are quite high. They can go up to 11%, depending on the risk that you are willing to take. And that is because there are other European countries that are still in the same banking system, and that's what it makes so interesting, where the interest rates are still quite high, and people are not really able to get loans from banks, and that's why they use those platforms to basically get a credit, and they are willing to pay quite a bit of money for that. And yeah, there are platforms here in Australia as well. I'll share them on my Instagram channel so that you can see what the name of the platforms are and what average performance you could make from them. So have a look on my Instagram channel. I will share them over the next couple of days. It's super interesting to see. Certainly a little bit more risky, but if you are keen to understand what it is, have a look. That's certainly something super interesting to see. Yeah, that's that were the topics that I had to share today. Thank you very much for watching. Looking forward to see you in my next video. I'm gonna be more specific in the topics that I cover now, and tell you more about, for example, products like an ETF. I go in a little bit more detail in my next video on what an exchange traded fund is. Thanks for watching, and I'll see you in the next one. Bye.